Welcome back, Alpha Hunters. Okay, so the week is over for the week of May the 27th, and we didn't really see much go on this week. Oh yeah, except for all the buying that we saw Wednesday, Thursday, and Friday. So we'll get into that, but I'm going to start today by just talking about the shooting that went on in Uvalde, Texas. This is about an hour away from where I live in San Antonio, Texas, and in the U.S., we need to make some changes, obviously on many fronts, but one of them is like this can't just continue to happen. So we really need to start thinking about ways to actually make progress to make sure these things don't happen anymore. So my heart does go out to the family, the friends, those that are impacted by this. It's ridiculous, honestly, that this keeps happening. But I'm not going to make this a political channel. This is a channel about finance and options, so we're going to get back to that. So this week we started out kind of strong. We saw some early strong buying, even Monday. We started out this week opening up and trading higher. And then Tuesday we traded down, we opened down and traded down to this long-term line that we hit 2 weeks ago. And then we traded below it last week. And then we hit it Tuesday and then bounced straight off from there. And then pretty much we've been on a rip ever since that bottom on Tuesday. And the reason why we did open down that morning, a lot of it had to do with irresponsible memo that got out from Snap and the CEO. So I'll talk about that here in just a second. But Wednesday, we just kept seeing some good buying kind of came in. I really thought we'd get up into this zone and then we'd retest and then we'd shoot higher for this week. But with Tuesday's action, it just kind of made sense that we just kind of kept going through that zone once we got there. And we did. Thursday, we just went right through it. And Friday was just a continuation. And I actually did put out some notifications in the Discord that this is going to be a pretty strong rip once we kind of broke above a certain level. And really is this 100 MA that was kind of coming down here, this moving average. We had been below it for nearly about a month and a half, ever since we topped out back in April. And then I was kind of figuring, like, once we broke it, you could just see the compressing that was going on here in the markets over an hourly time frame. And once we just kind of got above it, we were just going to shoot higher. And pretty much once we opened up over it, then Thursday morning, it just took off. So that was pretty much the story of the week. Kind of choppy on Tuesday, but outside of that, and we can look at an intraday chart. So I'll bring up a 15-minute and I'll show you what the whole week kind of looked like. So this was the open on Monday, and then this was the Tuesday. We just kind of got down to that line, right? And then it just chopped down there for about an hour and a half. And then after that, we just kind of been on a tear ever since. And then Thursday morning, we just opened a little bit higher and just screamed higher. So that was pretty much what kind of went on this week. So I'm going to really kind of deep dive into a lot of the Qs and also look at the big dog in tech, Apple. But first off, I'm going to talk about Snap and their irresponsible CEO, and also NVIDIA's earnings that happened to come out Wednesday. Now, Snapchat is most of us kind of know Snapchat as a mobile phone app company. And I don't really know of them anything other than that, okay? I just know that their CEO kind of developed the product several years back to cheat on his wife. And the interesting thing is I didn't even really know that this company was still publicly traded until the news came out Tuesday, or really Monday after hours, that this memo came out, just kind of how dire their business situation is. And this article, I'll link this article from Bloomberg down in the comments so that you can check it out. But basically, this is what I was looking for, was the full memo. And it was just kind of interesting. If you do read through this whole thing, you can kind of see what he's kind of talking about. But he talks about the challenging macroeconomic environment and just some different things like rising inflation, interest rates, supply chain shortages, labor disruptions, platform policies, probably one that's most relevant here, and then the impact of the war in Ukraine. If you want to read through the whole thing, but it's just kind of an epitome of somebody that doesn't know what the heck they're talking about, okay? And you don't really see smart business people talk about macroeconomic environments without being specific. The issues that I kind of have with this is really claiming that the macroeconomic environment is a challenging situation. And then basically he just cites everything that most companies have been citing during the earnings season, you know? And if you notice back in their stock chart, right, they actually had earnings about a month ago. So why the heck is he bringing it up now? Like, why didn't you bring up some of the stuff a month ago? And, you know, the war in Ukraine, that's been going on for almost 3 months now. So why didn't you bring it up last month? Like, if you just now figured out you're getting impacted by it? So there's just a lot of things in here that, why didn't they bring this up during the last earnings? Supply chain shortages. I have a major question with this. What supply chain shortages are you talking about? You don't make a product. Even if you do make a product, it's not a big deal to the company. You're an app on a phone. So someone needs to explain to me why I should trust this guy to run this business. Because I don't. Now, my outlook for Snap is it's definitely going to get bought up just because, you know, you drop that much, 40% in a day, you're going to get bought up. So I would definitely be looking for the bearish side later on. And I would not be surprised if this company is not publicly traded within the next 3 years. Now, I'm not going to say they're going to go to zero, but they'll probably just keep declining its stock price because the macroeconomic environment, you know, I have two thoughts on that. One, if he's saying that and he really thinks the macroeconomic picture is so bad, then he doesn't know what's impacting their business, which is really bad because the CEO should always know what's impacting their business. The second thing, if he does know, he just doesn't have control over it, okay? The 4 big players, obviously, in online ad revenue is going to be Google, Facebook, TikTok. TikTok is probably eating their lunch as far as Snapchat goes because you heard Facebook talk about it in previous earnings, and Google has even said that they've had increased competition. They didn't single out TikTok specifically, but they just said it's a higher competition area. So as far as Snapchat goes, I would not be looking to invest in this, and I've already seen some articles that, yeah, you know, this is a buy here. Sure, for a short-term bounce, it probably is, but I would not be buying and holding this sucker as they're probably just going to keep deteriorating away. But they will probably get so cheap in the future that they probably just wind up getting bought out. But let's talk about NVIDIA and their earnings. So NVIDIA's earnings this week, they were obviously the big dog with earnings this week. And you know, they actually beat the earnings, but where they kind of got hit pre-market, right? Earnings Wednesday after hours, and they gapped down, and then they just got bought up. But they came out on their earnings, their conference call, and they basically said everything that all previous companies during earnings season have already said. They're pulling back guidance, and then that was pretty much it. Like, they still have great demand, but they're just pulling back guidance in line with what everybody else has already been doing. But they're the last ones to do it, so this is why, okay, the market's like, we're done with news pretty much for the next couple weeks as far as like major companies. If you were bearish, it's like that was the one thing you were kind of really counting on was more and more news, and it's like a lot of it's just kind of gone. We did have FOMC minutes come out Wednesday afternoon, but not much change there. The market didn't really react all that much. But then once NVIDIA's earnings were done Wednesday after the market, that's kind of just where we just really started springboarding higher, as all the news is pretty much done for the next several weeks until we get to, you know, Fed interest rate hikes in June. That'll be the next big one. So we got several weeks here where we probably just don't have any major news, okay? If the news does come out, it's going to be very surprising. We'll probably have some inflation data, but some GOP data, but nothing major, just the weekly stuff. All right, so let's talk some technology. So let's look at the Qs. Now, it's been a couple weeks since I looked at the Qs. The past few weeks has been a little busy. We've kind of gone over a lot of analysis and a lot of data of our previous bear markets. So I'm going to do my best to see what we can make sense of the Qs and get back on the page here, okay? And then after this, we're going to look at Apple, which is obviously the big dog in tech. So they are going to have a big weighting on what kind of goes on. Now, what I'm going to say is we, in the market, we are probably just going to be in a bullish trend here for the next couple of weeks, okay? I would expect that this probably lasts maybe another 2 to 4 weeks, probably really more 3 or 4 weeks. And so we're trying to figure out where the Qs are going, okay? So we obviously have a clear downtrend here, you know, right here through this line, down. So that's kind of important just to kind of note that downtrend, because that is, I mean, everybody can see it, right? Another thing is we need to figure out where we could potentially pull up to. And I'm going to mark from all-time high to this first bottom and back up. It looks like we were just under the retracement of 0.618. right here under this line. So this is probably like a 0.6 kind of retracement number. So then what we want to do is take the top of this pivot and down to this recent bottom here on May 20th. And if we go up to a 0.6 retracement, it would be right here around 334 to 335 area. So I think that could be a possibility, is right here. And I'll put a box there, somewhere like right in that area. And I think that time frame actually might line up pretty well, just because I've been doing a lot of analysis on the SPY, so that's kind of what I'm looking for on the SPY as well. I do think the SPY will actually go up a little bit higher, just because it hasn't been as weak as the Qs have been. Very, very weak. You know, Qs have already been down roughly 31.5% from all-time high to the low it put in just last week. It's definitely getting hammer time with tech out there right now. And we saw some really, really big breakdowns, you know, with that Snap news on Tuesday. You know, if we look at Google just real quick, you know, Google broke down majorly and it got back down to this previous kind of zone. We could definitely see that we've kind of put in a near-term low for us to break down that much. So Google probably is a great buy here. I was really shocked it got that low, but when you know you have irresponsible leaders kind of coming out saying what they were saying, you know, you get great buying opportunities on companies that got affected. And Google was one of them. This is a screaming buy, so I would not be bearish here. I do think it'll probably roll over later in the year, as it's just going to get caught up in more of a tech sell-off. But if you were bearish, you had to take it off the table there, because that was something you just didn't count on. But back to the Qs, that would be kind of what I'm looking for. I would look for the same kind of retracement that it had in this first one. I would expect a similar one like that back up here as well. And the other thing that kind of makes it very intriguing is it'll be right below this cluttered area, but it'll break right above this one. And a lot of people, and this is one thing I am expecting on the SPY as well, is that this cluttered area, so we go look at the SPY real quick, right? Is this cluttered area, is once we break above that, I do think we'll get a flush out, and then that will probably be it. And so on the Qs, that'll probably be a very similar area. We'll probably get to that, and we probably just expect a flush out to the upside, and then that would probably be it. So I do think this will probably be a zone. If we get up to like 340, that's a possibility. I don't think it gets above this choppy area that we had back here in mid-April. I don't think it gets above this area, but anywhere in like the 443 area to 331, I think is probably going to be a top out area. I really think it just gets into this zone and maybe just peters out. So let's look at Apple real quick. And as far as Apple goes, so this one I'm kind of rubbing my hands, because I'm looking for the bearish rollover that's going to happen for the second half of the year. Okay, not hiding it. I'm going to look for that. I do think we are in a bounce on the marketplace. You guys know this. I bought into this 2 weeks ago. It was choppy over the past 2 weeks, but we definitely did break higher over the second half of this week. Now, all that was on the SPY, right? But what we can expect on the Apple is it to go higher. We're going to expect the Apple just push higher. But what I am going to love about Apple was we had some major breakdowns a couple weeks ago. And I really want to compare some of the breakdowns that we saw on Apple to really the SPY or even the Qs. But I'm going to keep it short. We'll just look at the SPY. You can look at the Qs also, but I'm just going to give you something to look at. But like this day right here on May 11th, so it's the number up here, Apple was down 5.18% that day, the 11th of May. So if we look at the SPY on the 11th of May, the SPY was only down 1.6%. That is hugely different than what we had ever seen, not ever seen, but we have seen previously from Apple's stock price. We hadn't seen it perform that badly to the downside against the regular market. So if we look at the Qs and what they did on May 11th, the Qs were actually down 3%, roughly 3%. Now, you would expect the largest company to have the biggest weighting, to have the biggest impact, but the fact that Apple broke down that bad just kind of starts to get my mind churning that I think it might be time for Apple to kind of just get dethroned for a while. Because the other thing about Apple is they were the most valuable company coming into this decade. And as we know, that doesn't normally hold up over decades, right? Because I just did a very quick look up to go figure out what was the most valuable company across the past few decades. And in 1980, it was IBM. 1990, it was Exxon Corp. 2000, it was General Electric. 2010, it was Exxon Mobil. Now, the reason why it was 1990 was Exxon Corp. and 2010 was Exxon Mobil is because Exxon and Mobil actually merged in the, I believe, late 90s to form Exxon Mobil. And then now we have Apple, okay? And think about where Apple was back like 10 years ago. It wasn't even close. So I'm not thinking Apple's going to be the most valuable company over the next, at the end of this decade, right? At the end of this decade, I just don't see that happening. And I think it's going to start really with this pullback that they're going to have later this year as we go into next year. People are just going to look for new investments. You can't just keep growing at the pace that they've been growing. They've done very well. I'm not saying the company's going to zero by any means. They're still a hugely valuable company. They do a lot of great things. I'm just saying there's just going to be other opportunities, and people that have been invested in this company for much of the past decade, 2 decades, that have seen tremendous gains are going to take them off the table, and they're going to find other things to invest in. And this sell down that they had over the past really 2 months was 26%. That is a huge move that they really outpaced to the downside compared to the market, the Qs, and that kind of thing. So down from its all-time high of roughly 27.5%, I would definitely expect to see a lot more weakness from Apple going forward as we get into the second half of the year. Now, obviously, it's going to get bought up here. The market's going to get bought up. A lot of people are thinking Apple's on a discount. And they should, right? It's a great company. They just got heavily discounted. But some of these weakness days that they were down big time, where they broke some of these major trends, I do think we will see more weakness later on this year. And I think we could definitely get back up into the 160 area, this 200 moving average, the 100 moving average area. And then that's probably where I'm going to start looking to potentially take my bearish position in Apple for the remainder of the year, okay? Because this area is super far away compared to where it is for SPY, right? The SPY, it's right here. We're like kind of getting into that zone already, and Apple's not even close to that choppy zone where the SPY was there for almost 2 weeks, a couple weeks back. So I could definitely see Apple being a lot more weak as we go into the second half of the year, going into next year, as I think investors are just going to start peeling back from it, okay? They're going to have to find new ways to bring in more earnings, more revenue. And I just don't see them in those areas, right? They're not big into AI. They're not big into cloud. They're not big into autonomous driving. I know the reports about a car or whatever, but they're not big in those areas. They're not big in the metaverse. So I don't see it. I just don't see it as far as like a major revenue or earnings influx from this company. And the other thing is, with supply chain issues and talking about inflation, that is something that is not good to a company that sells a lot of physical product. Now, I know they sell a lot of services, but that is something that Apple could very much see a lot of issues in the future with their product margins and stuff like that. But that is kind of what I'm thinking about Apple, and that's kind of what I'm thinking about the Qs as well. I do think later this year we will roll over. And if I go back to the SPY real quick, so we'll look back in the SPY, and I'm going to do a little bit more deep dive on the SPY next week. I wanted to spend a little bit more time on the Qs, as someone asked to cover a little bit more on the Qs and tech and stuff like that. And so I did cover just a little bit of that. But here's the interesting thing is, we're going to have like a little pennant pattern kind of form here, right? We got our new downtrend line that we have coming down. Let me zoom in a little bit. And then we have this long-term trend line that goes all the way back to the beginning of 09. So I do think we'll get up here and we'll start just slowly chopping down, and we'll probably break down to it, probably chop. And then I would imagine maybe sometime in September, October, we'll break this downtrend line that we've had for 13 years pretty much on the market. And then we probably will never come back to that trend line again, right? Because if we look back long term, we've really only broken through that trend line once, twice. And the first time we actually broke down through it, we were actually back above it the next month. But with the pandemic, we actually spent like 2-3 months below it, and then we were back above it. But that is a super strong trend line. I think it's going to be time that we kind of break through that and probably just won't ever come back to it. But that's kind of what I'm out looking for. So I'll talk a little bit more about the SPY and this general market stuff next week. But I wanted to spend a little bit more time this week on the Qs, tech, Apple. Obviously, they're the big dog in just the marketplace as far as market cap and tech goes. So I want to talk a little bit about Apple and kind of just my game plan for Apple going into the second half of this year, as that will probably be my play as far as like my bearish bet into later on this year. So have a great weekend. Alrighty. Take care, Alpha Hunters.